Ladies and gentlemen, good day and welcome to the Jindal Stainless Q1 FY26 Earnings Conference Call hosted by Motilal Oswal. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Alok Deora from Motilal Oswal. Thank you and over to you, sir.
Thank you and welcome everyone to the earnings conference call for Jindal Stainless. I would first like to thank the management for giving us the opportunity to host the call. So from the management team, we have with us today Mr. Ltd Jindal, Managing Director, Mr. Tarun Kulbe, CEO, CFO and Whole-Time Director, and Ms. Shreya Sharma, Head of Investor Relations. To start with, I'll hand over the call to Shreya and post the introduction by Mr. Jindal. We can take up the Q&A. Over to you, Shreya.
Thank you, Alok. Good evening, everyone, and a warm welcome on Q1 FY26 Earnings Call. We have shared our Q1 FY26 Earnings presentation with the stock exchanges, which is also available on the company's website, and today's call discussion will be on the same line. Please note some of the information on this call may be forward-looking in nature and is covered by the disclaimer on slide 2 of the earnings presentation. Now I would like to hand it over to our Managing Director, Mr. Ltd Jindal. Over to you, sir.
Thank you, Shreya, and a very good evening to everyone and welcome to our earnings call. I will first discuss the key business highlights for the quarter ending June 2025, following which Mr. Kulbe will take you through our operational and financial performance. Building on the positive momentum from last quarter, our sales volume in Q1 FY26 grew by 8% year-on-year and remained steady quarter-on-quarter, mainly supported by sustained domestic demand. Focusing on specific segments, auto sector deliveries increased on account of special grade materials, with segments such as lift elevators, railways, white goods also delivering a healthy performance in the quarter. Our special product division continued to support this momentum, contributing across key applications. Overall, domestically, we are witnessing increased adoption of stainless steel in large-scale infrastructure projects such as metro rail, airports, railways, among others, signaling a growing shift towards long-term sustainable material used in public infrastructure. The global trade environment, as we all know, is extremely dynamic, driven by tariff disruptions and ongoing realignment of global trade flows. Amid challenging global trade conditions, we are strategically prioritizing the domestic market, which offers compelling opportunities to maintain our growth momentum. Our flexible market strategy supports our commitment towards volume growth. I am happy to share that owing to the success of our co-branding initiative in the pipe and tube sector, which supported our growth in this segment, the Jindal Saathi campaign is now extended to kitchenware and sink category. This initiative reinforces our commitment to quality and will lead to enhanced business opportunities. In the context of trade measures, the Indian Stainless Steel Development Association has submitted an application to DGTR on behalf of the stainless steel industry, seeking action on certain cold-rolled stainless steel flat products from China, Vietnam and Indonesia. Considering the increasing adoption of trade protection measures worldwide, we trust appropriate measures will be adopted to curb the injury to domestic industry. On the sustainability front, we continue to make strong progress towards decarbonization. In FY25, we achieved a 14% reduction in Scope 1 and 2 of GHG emissions through our ongoing initiatives. Reaffirming our commitment to sustainability and safety, we received the LEED Platinum certification, the highest level of certification under the globally recognized LEED Green Building Rating System. In addition, we are fully compliant with CBAM's quarterly reporting requirements and remain strongly committed to reducing our CO2 emissions. As the framework evolves, we remain agile and dedicated to staying ahead of compliance obligations, ensuring we continue to serve the European market with confidence, transparency, and a strong focus on sustainability. With this, I would like to hand over to Mr. Kulbe to discuss our operational and financial performance.
Thank you, Vijay. Good day, everyone. Welcome to the call. I would like to begin by providing a detailed overview of our operational and financial performance. Our deliveries stood at 6,26,252 metric ton in Q1, an increase of 8% year-on-year basis, but remained flat Q-on-Q. Our Q1 EBITDA increased 8% YOY and 23% QOQ to rupees 1,310 crores, while our PAT stood at 715 crores, an increase of 11% YOY and 21% on QOQ basis. During the quarter, we benefited from an enhanced product mix with increased volumes of value-added products and special grades. Our digitization initiatives, including Stainless Mart and QR code loyalty program for pipe and tube, leading to seamless customer experience, is driving deeper customer engagement. Other initiatives such as the Stainless Academy and Fabricator Training Program is building robust ecosystem to support the stainless steel usage across industries. On the balance sheet side, there is an improvement in our net debt position with a reduction in net debt to rupees 3,869 crores as on June 30, 2025, underscoring our ongoing emphasis on maintaining a healthy balance sheet. This prudent approach positions us well to navigate the prevailing global macroeconomic headwinds. This is also being reflected in our leverage ratio. We remain comfortably placed with a net to debt EBITDA ratio of 0.81, well below 1, and net debt to equity of 0.22. On the subsidiary front, Romania continues to ramp up in line with our expectations, with capacity utilization reaching approximately 60-65% for Q1 FY26. Our other subsidiaries have also delivered a satisfactory performance in terms of EBITDA contribution at group level. Meanwhile, our SMS project in Indonesia is progressing well and remains on track within the defined timeline. Looking ahead, we remain confident in the continued growth of domestic stainless steel demand, driven by strong economic activity and infrastructure-led consumption, reflecting a broader shift toward long-term sustainable material use in public infrastructure. This brings my remarks to a close. I would now like to hand it over to the moderator to begin the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Dixit from Goldman Sachs. Please go ahead.
Hi. Good evening, everyone, and thanks for the opportunity. Congratulations for a good performance in very testing quarter. Couple of questions from my side, sir. The first one is essentially on if you could highlight the performance, particularly of Rathi, and the progress of ongoing capex at Jajpur plant with respect to downstream capacities and the logistics infrastructure that we mentioned earlier. That would be very helpful.
So Rathi, now we are almost running at 80-85% of capacity utilization. While definitely our original plan was to produce more of rebars from there and sell it, but so far we have not been able to do so. Majority of our production, almost 70% of the production is wire rod. So, but our endeavor is to get more and more into rebar, and that is what as a company we are continuously making efforts.
And generally during the monsoon period anyway, as we all know, in construction, infrastructure projects do take a slowdown. So same way in Rathi for rebar side, we saw the slowdown, which we expect next coming quarters to pick up now.
And also in some private places, we can see that some people showing, interest even in the stainless steel rebar for the building purpose as well. And on capex front, so far as the spending is concerned, we had given a guidance of around 2,700 crores capex for this FY26. So out of which in Q1 we have already done 665. Broadly, all the capex are in line with the timelines what has been given earlier. So basically our downstream, as you were asking, in FY27 is what we had given the numbers. So broadly, they're on track. As of now, they're all on track.
Wonderful. I'm glad to know that. The second one is on a very interesting point you have made in press release that we are supplying to defense, particularly the stainless steel required for ATGMs. Now, considering that in India, defense is catching a lot more traction, particularly, with respect to marine platforms or even aerospace or missiles. So do you see this particular segment as something very promising for us? If you could just...
Absolutely. It is still in terms of low in volume, if I can say, but very high in value and extremely prestigious also. And always we have been a company to support our country. We have to be Atmanirbhar. We should not be depending on special grades from outside India. So we do see it as becoming an important division of ours.
Yeah, I know you can't divulge a lot of details with respect to defense, but if you could highlight that, are we carrying some R&D here? Are we developing some new grades? And broadly, what all platforms we are looking to cater to in future?
So it's a mix of all, Amit. It's also currently substituting certain grades that are being imported. And as always, our R&D team is working on new variants, better performance grades in a lot of applications. I mean, we're catering to all three, Army also, aviation also, Navy as well, and even aerospace, ISRO and VSSC and HAL. So now we are present, but again, like I'm saying, the volume is still relatively small.
Okay, great. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. First, congratulations for good set of numbers. So just trying to appreciate quarterly improvement in EBITDA per ton. Like one can think of few variables. One is Chromeni, second is probably product mix, which could probably also include CR to HR ratio, which might have included because of Chromeni. Third could be potentially inventory gains, or probably we didn't have losses, probably what we had in Q4 into Q1 that could have reversed. Fourth could be 200, 300, 400 change in mix. So can you help us understand basically broadly these four variables and any other variables which would have contributed to improvement and spreads on a sequential basis, please?
You have answered the question extremely well, Ritesh, and these are the main factors. So Q4 was abnormally low. Q4 of last year was abnormally low because of these factors, like you have mentioned. And in Q1, there has been a healthy increase of our CR capacity due to Chromeni, which definitely impacts. There's been increase in special grade sales into auto, lift elevator, white goods sector. So that is why we are seeing improvement.
And then for that reason only our guidance, even after Q4, we maintained 19 to 20.
Yes, after Q4 of last year, we did not dip our guidance and we maintained it because Q4 was an aberration quarter totally. So now we're quite confident of delivering these numbers.
Sir, would it be possible for you to indicate some numbers on CR to HR, volumetric mix, Chromeni contribution at the EBITDA level, and third is basically probably what was inventory loss, if there was any inventory gain in this particular quarter?
So in terms of Chromeni, definitely I think now we are at 65% capacity utilization. and every month we should see that increase.
In H2, we intend to take it to around 80-85%.
80-85 by H2 of this year. And like from EBITDA perspective, we give always a blended number. So we're sticking to that between 19 to 21,000. We still like to stick to that.
Sir, CR to HR, where we are, where the aspiration is to be?
So if we compare from Q4 to Q1, in CR, almost 12% increase we have already done. And as we said that once this in H2 once the Chromini further ramps up, this number should go to 15 to 20% over Q4. And I'm talking CR to CR increase.
And if you ask aspirationally, our target is to take our total CR capacity to at least 75% of our melting capacity. That is an aspiration, but that will take few years, and what capex we are doing is in tune or in line with that.
Sure. Sir, my second question was wanted an update on the blast furnace 2 million ton, which is under the promoter entity. Any update over here? And I just wanted to tie this thing up because once this furnace comes, we had the optionality to use more NPI. So I don't know the timelines. To my knowledge, it was August 25. So are we on schedule, and how it will impact the cost curve for Jindal Stainless going forward?
So Ritesh, they're still very early to answer these questions. There has been a certain little bit of a delay in our blast furnace operation, but being a private entity, I would like to take this maybe offline with you.
Sure. And if just one question, last question on capex priorities. We had deferred RUVL and HRAP. So what is the status over there, and anything incremental on Maharashtra expansion, what we had spoken about in the last call?
So HRAP is on track, like we said, by FY27, maybe H2 of FY27, our HRAP line should be commissioning. And Maharashtra project, like we said, land acquisition is on track, and things are progressing smoothly there as well.
Thank you. I'll join back the queue for more questions. Thank you so much.
Thank you.
Thank you. The next question is from the line of Vikas Singh from ICICI Securities. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. Sir, just coming back to the Maharashtra project, since you are already acquiring land, so have you something in mind that in first phase, what kind of capacity which you are going to put up, and what could be the potential capex for that?
So in Maharashtra, whatever we have announced that the capacity will come in phases in the module of 1 million tons. This is what we have already stated, and this information is there. Up to 4 million ton is what we have announced. And we still intend to build it that way. But of course, 5 years is also a long time. If we see demand-supply situation changing, maybe then we can accordingly amend our plans and handle the things accordingly. So because right now, all these things are open, yet to be, tied up.
So basically, like Mr. Kulbe is saying, our Maharashtra plans that we have announced are still remaining intact. And at a large level, it's going to be a 4 million ton project that we're envisaging. But again, depending on market conditions, depending on global, let's say, uncertainty or opportunities, we can either expedite it also, or if required, delay it also. But looking at all things positive, we would like to stick to our timelines.
So that's what I understand, sir. Just wanted to know this phase 1 of 1 million ton. Have we finalized any initial capex for the phase 1?
No capex has been finalized, but we are targeting FY 29-30.
Noted, sir.
As soon as our plans are ready, because we would like to take all our shareholders through it, so we will come with a proper announcement and interaction.
Noted, sir. Sir, this quarter, JUSL numbers EBITDA suddenly jumped sharply, which also was one of the reasons for the good performance. So anything, what has happened actually? Because volumes didn't seem to be growing at the same pace.
So JUSL, I believe all of us know that it is, first of all, it is 100% subsidiary to JSL. JUSL works on a job work model, and because we have already announced our volume growth of 9 to 10%, which the guidance what we have given, and because company is performing, then in line with that, JUSL performance is also reflecting the similar.
I was comparing on the sequential basis. It went from 172 to 192 crore, but the volumes on sequential basis is actually slightly down. So, if you could just elaborate what has actually contributed to that jump?
Yeah, so actually in that also through JUSL, some material we also sell beyond tolling. So some changes in that impacts it, but broadly whatever the numbers you are seeing, we believe that the similar kind of performance can be maintained.
Understood, sir. Sir, lastly on our Indonesian venture, if you could give us update on the NIP as well as the other 1 million ton facility which were putting up. So some update on those.
So on my shop, I will say that it is in line to whatever we have announced. We had given that in FY26, FY27, this will come. So we believe this is progressing well. So far as NPI is concerned, there we are producing, we are ramping up and ramped up to a certain state. But yes, nickel fluctuations are there, and because of that, so far as EBITDA is concerned, we see it in the range of 500 to 1500, but fluctuating because things are a bit fluidic on that side of the market. Whether it is nickel ore, whether it is, so many things are happening on that front. But again, I will repeat that that business for us is also raw material security, and we see it that way also to that business.
Notice, sir. That's all from my side, and thank you.
Thank you.
Thank you. A reminder to the participants, please press star and 1 to ask a question. The next question is from the line of Parthiv Jonsa from Anand Rathi. Please go ahead.
Hi, thank you for the opportunity, sir. So before we dive into the question, just wanted to get a quick breakup on the 200, 300 and 400 series for the Q1.
Yeah, sure, Parthiv. So for this quarter, I read it out in the sequence of 200, 300 and 400. It was 36%, 46% and 18%.
Okay, thank you. Thanks, Shreya. So my first question is pertaining to the potential so-called anti-dumping duty. Any timeline, what you can give us pertaining to the anti-dumping duty, what can we expect, what not to expect on this particular topic?
So I can give you the latest update. DGTR has allocated the two officials to the case who are evaluating and have raised certain clarification from the industry. And the industry is collating all the responses and clarifying them. And generally, the standard duration for completion is approximately 1 year. But considering the increase in adoption of trade protection measures worldwide, industry is hopeful of the earliest initiation followed by recommendation. So, just to summarize, they have allocated officials to start the process. The question answer kind of classifications are on, and we are quite hopeful within the next couple of months, investigation should start.
All right. So the next question pertains to the current tariff scenario, especially from the US. Considering multiple global headwinds, especially from US and EU side of geographies. Though you have kept, we really appreciate that you have kept your yearly guidance unchanged. But I believe the change in export mix definitely have some impact on the realization. Is the understanding correct? And if so, what can we fetch from this? That what can be the differential in export and domestic, and what kind of impact it can have?
So like we've been saying for last couple of years, actually our focus is primarily domestic and EBITDA maximization. So export has never been a compulsion of ours. Export, we are continuing to supply our long-term customers that we have built over many decades. Those are the only ones that we would like to continue to support. Our focus is EBITDA maximization. Currently, domestic market is where we are seeing maximum opportunity, maximum demand also coming in, and that is going to be our primary focus. And like I said, export is not a compulsion. So if we see some good opportunity, then only we would like to export. Otherwise, we will continue to service our domestic market.
And so, if I may just squeeze in one more, just wanted to get your guidance on the nickel and for the coming quarters, and also EBITDA per ton, considering you have fared really well in Q1, and also your GUSL target is expected to remain around the same level going forward. So you can just give some guidance, and like, would you tend to change your EBITDA per ton guidance slightly higher going forward, or you will still keep it intact about 19 to 21,000 level?
At this moment, we will stick to 19 to 21,000, and definitely if we see certain things changing, then we'll come with a revised guidance as we always do. So we would like to stick to that. What was your first part of the question?
So your outlook on nickel, sir. How do you perceive the prices going forward for the Q2 and?
It's very difficult to really predict nickel, but we expect it to remain at the current levels. It's been hovering between, let's say, 14 to 16,000, and our expectation is that it should remain at this level.
All right. Thank you so much. Thank you for the opportunity.
But like I would also mention, we never take a position on nickel. We always work on natural hedging, and that is how we will continue.
Sure. Thank you so much.
Thank you.
Thank you. The next question is from the line of Sagar Sahu from Jefferies. Please go ahead.
Thank you for the opportunity. I just wanted to get your sense on what has been happening with imports from China in the last few months, and if implementation of BIS norms has had any impact. Thank you.
So this is true that government, the BIS, and also the Ministry of Steel, they have come out with some clarifications on the QCO requirements, where the ingredient product also should be BIS compliant, and also the BIS has been made mandatory on certain downstream products as well. So all this definitely has put some restriction on the inferior quality products getting into the country, and with that, some amount of reduction in the imports we can see. And we believe that this also means that the quality product requirement within the country should go up, and that should help industry as well. But at the same time, we would like to watch it for some time, because in the past we have seen sometimes government also, sometimes changing their position. But we are hopeful that this time they should not be, because already we have seen the kind of discussions or representation made to the government, but they are not budging, because this is something linked to the quality, and that is why they are keeping to the ground.
It's a very welcome move, and I think it will support the entire country for long term to come. There have been so many examples in the recent past where people have used substandard Chinese material and infrastructure projects are failing, other things are getting, destroyed. So this is a very welcome move to only allow quality products in India, and it's a very good opportunity for everyone to take benefit of this.
Thank you so much for that. My second question is around domestic demand and your strategy around co-branding, etc. So you mentioned that the strategy in pipes and tubes has been successful and has been extended. Is there any plan to do something similar in any of the other segments as well?
So, like I mentioned, we just started for kitchenware and for sinks. and every time actually you will see more and more addition also. Because again, we would like to support our MSMEs, we would like to support our domestic players in this regard. So we are definitely taking this forward.
Thank you so much. That's all from me.
Thank you.
Thank you. A reminder to the participants, please press star and 1 to ask a question. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity again. Sir, I think you indicated capex of 2,800 crores. Is that correct?
2,700.
And how should we split for 26 and 27? I presume it's for 2 years together.
So Ritesh, for FY26 it's 2,700, and whatever is the spillover capex, in case it is going to be there in 27, and otherwise for 27 the capex amount is roughly around to the tune of 1,000 to 1,200 crore.
Okay, I think in the last call we had indicated a number of 1,800 crores plus maintenance capex. So how should one understand this bump from 1,800 to 2,700 crores?
No, it was always, even in the last call, if you go by the transcript event, it was always 2,700 crores for FY26.
1,700 plus 1,000.
Yeah, which includes the last year's spillover as well. Yeah. So,
sure, that's helpful.
1,700 plus 500 of maintenance plus 500 of spillover, which is total 2,700.
Sure. That's helpful. Second is Indonesia. We were looking to dispose assets. I think we had got something around $20 million, and there was balance also which was pending, and we were awaiting the proceeds. Any indication over here on how much of money has already come in, how much incrementally can come in, and timelines?
No. So equipment, you have already stated that is what the number is, 20 million. After that, what remains is the land. Not yet any deal made, but we are confident looking at the market prices over there that no such finally post we sell the land, no hit comes to the books of the company.
And we are not in any desperation,
Yeah.
So when we get a good value, then only we will sell the land.
Sure. And do we have any plans to merge the acquired downstream assets? Because I presume there were accumulated losses over here. Any plans on this front for tax efficiencies?
So that is something, it is in the process of evaluation, and once we make any decision, we will let you know.
But you're right, we are looking at it very closely and we would like to take this forward.
Sure. This is helpful. Thank you so much. Thank you.
Thank you. The next question is from the line of Patanjali Srinivasan from Sundaram Mutual Fund. Please go ahead.
Thank you for the opportunity. Very good set of numbers. I have a few doubts. So, our mix has actually broadly remained the same over the last couple of quarters, but current quarter realization was much better, and profitability also in terms of cost reduction is visible. Can you give me a bridge of where this improvement is coming from?
So,
Hello?
Can you please repeat the question? We couldn't get it fully.
Okay. No, so the current quarter realization has improved. Our mix is broadly same compared to the previous quarter. I don't know how this increase of around 4,000-5,000 rupees has happened. That is one thing. And secondly, on our cost front, there's been a decent decrease in cost also, from the previous 2-3 quarters. So, is there anything that's contributing to this? Can you give me a bridge of where this cost benefits are coming from?
Yeah. So more than that, I think Mr. Jindal in one of the reply to one of the questions he mentioned it that we have been we are able to enrich our product mix. We are focusing or not focusing. We are able to get more into cold roll and more value added like polishing polished products as well. So, and then our special products. So all this is helping, to increase this realization.
And we mentioned Q4 of last year was a total aberration.
Yeah.
So that's why now Q1 is back to our normal course of business.
Sure, sir. Understood. Sir, and what would be your volume guidance for this year? Because I think last year was a relatively weaker year for the industry.
We are not changing. Like we mentioned, 9 to 10% volume growth this year, and we are quite confident of delivering that.
Okay. Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good evening, sir. So the first question is on, whether are we seeing how are we seeing the trends of nickel scrap prices? Is there some softening over there, or the broadly stable?
It is very difficult to take a call on nickel and what the nickel prices are going to remain or not. So, like I said, we don't really take a position on it. We do natural hedging, and that is the way we're going to go forward.
Sure, sir. But what, in the case of aluminium, in a couple of quarters back, we did see an increase in scrap prices, because probably China was importing more scrap. So is there something similar happening in nickel, or, it's totally different?
No, aluminium and nickel do not go hand in hand. You cannot relate them totally. Nickel is a different kind of ball game compared to other raw materials in the market.
Sure, sir. The other thing is, I think the purchase of stock in trade, I think is probably low compared to the last year. So, is this trend expected to continue?
Sorry, purchase of? I missed that. Purchase of what?
The purchase of stock in trade.
Purchase of stock in trade. Okay.
So that seems to be lower than. Yeah, so I'm asking if this trend expected to continue of lower external purchases?
Yeah, broadly it will be in this range, what it is in this quarter. Yeah.
Sure, okay. And lastly, sir, so we've guided for a 9-10% volume growth. So what sort of utilization level would be at the end of FY26?
It will be around 80-85% capacity utilization.
And then going ahead, the nickel, the Indonesian unit should come on, so that would add to the capacity. Is that understanding correct?
Yes, but that will happen next year.
Okay, so maybe then FY27 also volume growth could be constrained by capacity, or we can probably operate at more than 100%.
We'll come when we are closer to the time period, but we expect 9 to 10% growth should happen also.
Sure, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Ashish Kejriwal from Nuvama Institutional Equities. Please go ahead.
Yeah, hi. Thanks. Good evening, everyone. Sir, quickly, you have mentioned few points which can bridge the EBITDA from fourth quarter to first quarter, which could be your uses of low-cost inventory or some change in inventory, product mix improvement, realization improvement, and cost decline. So is it possible to even, not pinpoint, but at least, broadly, how much, I'm trying to quantify it, because, when we are getting a EBITDA bridge, how much is contributing what? Because when we are saying product mix improvement, can it be, 30-40% of the change in EBITDA which we have seen, or is it only 10% of that? So, when we are giving these statements of, product mix improvement or this, if we can quantify a bit, even in a percentage terms or anything which is feasible for the company, I think that will help us to get a good sense of the numbers. So, is it possible to quantify now, or?
Difficult to quantify. What we can try to do is maybe calculate this for you and share it offline, but it's, I think, a factor of all these things that you mentioned. Yes, I believe that's what you're asking, which one has contributed more or less. So that we will try to share with you offline. We have not.
Sure, sir. Because Abhidha, even if we give a broad buckets, like, whether it's because of realization improvement or cost improvement or inventory improvement, then it will help us understanding in a better way and give some more confidence that going forward also, if macro changes favorably, we can do more.
Main contributing factor is more value-added products. So our CR capacity has picked up. We are serving more higher variants. Like if I give you an example, in auto also now we move to the higher variants in auto sales. So all those factors help us in improving our margins.
But is it possible to quantify something like when we are saying that CR capacity improvement? So in terms of overall volume, what could be the contribution of CR capacity last quarter or this quarter or last year? Then we know it.
That we can share with you offline.
Okay, that's great. Secondly, is it possible to quantify, how much inventory we have at the end of the quarter versus last quarter? Finished products inventory.
Product inventory you would like in volume?
Yeah, volume as well as in value terms if you have. It will be great if you can share both.
Yeah, sure, Ashish. We will share this as well.
Okay, that's great. And thirdly, I'm sure that you don't like to divulge about Chromeni profitability, but if you can give a sense of whether Chromeni is making EBITDA positive now at 55-60% utilization, or still it is EBITDA negative?
No, absolutely. It's our value-added core door product, so it is definitely EBITDA positive.
Okay. So from when it has become EBITDA positive, this quarter only, or it has been EBITDA positive for fourth quarter also?
Say for last few months it has been exactly. Again, I don't have the number from the top of my head, but from Q1 of this year it has become positive.
So is it possible to share the number? Broad number will also do. Because we share JUSL numbers.
No, we will take this offline, Ashish, with you, and we'll discuss.
Okay. Sure.
And,
sure,
because these are again trade, certain things that we don't like to share.
Understood. So lastly, if I look at the number this quarter as a base, then is it safe to assume that at least macro side, we are not seeing deterioration as what we have witnessed in first quarter?
We are sticking to our guidance, Ashish, 19 to 21 with this volume growth. We are definitely confident of achieving that. I think there is a lot of uncertainty, again, globally and everything, which is why this much we are absolutely confident. If anything changes positive, negatively, as always, I will definitely come back with a fresh guidance.
Sure. Thank you and all the best.
Thank you, Ashish.
Thank you. The next question is from the line of Alok Deora from Motilal Oswal. Please go ahead.
Yes, sir. So, sir, just linking to the previous question only. So, how's the demand scenario now? I mean, we have maintained the volume growth, but considering the uncertainty, could there be any slippage there? Because first quarter has been pretty muted, so we need to catch up quite a lot especially in the second half. So, first on that.
So Alok, we are extremely bullish on the domestic growth and domestic demand, and the more uncertainty is to do with exports actually. But absolutely on our domestic numbers and our growth that we are foreseeing, there we don't see any kind of aberration or dip coming in.
Sure. And on the export side, I mean, it's, in terms of proportion, it's better than what we did in the last quarter. So how do we see the share shaping up? Could there be a case where this again goes down and which could impact the, the realization and the profitability, or we may expect it to be in the similar range?
Our focus as an organization is EBITDA maximization. And if by anything it dips our thing, then we don't have to. Export is not a compulsion for us. We can, like many years, even during COVID time and everything, we proved that we could give 100% volume also required into the domestic market. So we are not really concerned with that at the moment.
Sure. No, that's all from my side. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Parthiv Jonsa from Anand Rathi. Please go ahead.
So just wanted to get a clarification. You said 2,700 crores this year in capex and thereafter about 1,200-1,500 crores. Am I correct? In 27.
27, that number.
So next year, Parthiv, it will be somewhere roughly between 1,000 to 1,200 CR.
Okay. So considering the Maharashtra capex and all, so the major capex would start rolling in from 28, 29 onwards. Am I correct? Or even prior to that?
For Maharashtra, still too early to say for Maharashtra. We currently we are talking about our current standing operations.
Okay, sir. And also just in continuation with my previous question on the nickel, because I believe that, realization is somewhere correlated to the nickel prices, if I'm not mistaken. Just wanted to get your guidance on the Q2 blended realization. What are you expecting for stainless?
Again, like I said, it's difficult to comment on nickel per se. That's why we give our EBITDA per ton realization at 19 to 21. That is all that in terms of I can give that guidance that we are confident of achieving.
And what about how do you perceive your realizations for the next quarter? How are we sitting as on this?
So, Parthiv, basically the prices of stainless steel is driven by the underlying prices of the raw material. So it's difficult to comment on the realization because, as you know, it's more a pass-through. Basically, so whatever is a reflection of the nickel and the ferrochrome price movement is there on the stainless steel prices. So it majorly depends on that as well as the product mix during the quarter.
Sure, I understand that, but I believe a couple of your global peers have taken 2 or 3 price hikes in the last couple of weeks actually. So just wanted to get your idea on that because I believe a couple of them have taken almost $60 to $70 of a price hike. That's the reason the question. So are we expecting similar kind of a hike in domestic market as well?
So far we have not changed our pricing.
Yes, we have not changed any of our pricing.
All right. Thank you so much.
Thank you.
Thank you. The next question is from the line of Rakesh Roy from Boring AMC. Please go ahead.
Yeah, hi sir. My first question regarding the export market. As you said, it's a tough. In last call, you have mentioned that we will grow near 20% year-on-year growth, sir. So this will sustain or come down, sir?
Rakesh, if you are aware that how uncertain the export market is. At that point, it was a different situation of what it is, and today it's a different situation of what it is. And tomorrow, with Mr. Trump in this seat, it could be a different situation. So it's extremely difficult to predict or give you any kind of guidance on export. That's why we are extremely confident on delivering our numbers despite any changes in export. Domestic is our focus. Export is only going to be to the tune of wherever we can get certain good margins, then only we will export. Otherwise, domestic पे ही focus करेंगे.
Okay, sir. Next question regarding the Rathi, sir. Can you share the volume number for Rathi for this quarter?
So Rathi for this quarter, it operated at around 80% capacity utilization. 80-85% is what we have achieved. And so the ramp up is quite satisfactory. It's just more when more of a rebar sales are going to increase in the portfolio, then we'll see a better returns going forward.
Right, sir. And sir, last question, do you see, sir, most of the company have, sir, impacted on the export market. Do you see any pricing pressure on domestic market due to, sir, this hampering of export?
No, we have not seen any impact of that, and we should not see any impact of that.
Right, sir. Thank you, sir.
Thank you. Ladies and gentlemen, as there are no further questions, I now hand the conference over to Mr. Jindal for closing comments.
Thank you, and I would like to thank everyone for attending this call. Amid persistent global volatility, we continue to reinforce our market leadership through a strong customer focus, consistent innovation, and operational excellence. With our focus on value-added products tailored on specific application and strengthened market relationships, we are well positioned to sustain momentum across markets. I hope that we were able to answer all your questions. Should you need any further clarification or would like to know more about the company, as always, please feel free to contact our investor relations team, and would like to see all of you physically at some point or the other this year. Thank you once again, and speak to all of you soon.
Thank you. Thank you, everyone.
Thank you. Thank you, ladies and gentlemen. On behalf of Motilal Oswal Financial Services Limited and Jindal Stainless, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.